Hey everybody, welcome to the Perfect Storm Trading YouTube channel. It is Saturday morning, August the 14th of 2021. Don't forget to stop by the perfectstormtrading.com website, sign up for our contest, get yourself a chance to win the Perfect Storm Market Timing Book and Indicator Package. In today's video, I'm going to show a little bit on volume. There are ways you can use volume as a leading indicator. So I've got three charts set up. They're daily and weekly, and I'm going to go through a couple of volume indicators and how these can get you some really good trading setups. So what I'm going to do in this video, I'm going to show you the GLD ETF, then we're going to look at the ES September contract, and then we're going to take a look at Apple stock. So we're going to look at an ETF, a futures contract, and one stock. Now as you can see, I have two indicators on this chart. The top indicator is a ratio calculation. It's advancing volume divided by declining volume. So when the indicator is moving upwards, advancing volume outweighs declining volume. And when the indicator is moving down, declining volume is increasing over advancing volume. The black horizontal line in the indicator is 1. That's at the point where advancing and declining volume is equal. When it's below that line, declining volume is greater than advancing volume. The bottom indicator is a volume counter. And with that, you can set a start date. And what that does, that counts the number of shares as a percentage of the float. So what you can do with this are two different things. You can take the total market capitalization, which is all the shares outstanding of a stock ETF or all the open interest in a futures contract. You can use the total amount, or you can take what's often referred to as the float. And what that is, if we're talking about a stock, that would be the shares held by insiders or large institutions are removed from the overall market capitalization count of the total volume available, because that's held by supposedly, let's just call it, the strong hands, and that doesn't get traded very often. These are long-term holdings. So the balance of the shares, which is called the float, is what is being traded by the public. So I have examples of both. So what we want to do is every time the float turns over, we can anticipate a turning point. And what I noticed, that a lot of times, even when the float hits 50%, you get a turning point. So on this indicator, you can see the blue line in the bottom panel is the 50% line. The red line is the 100% line. So what happens when the accumulated volume from the starting point hits 100%, the counter kicks over and starts over again. So every time you see the green bars going from 0 up to 100%, the float is starting over in its count. So what I did, I anchored the start of the count here at this low on the GLD chart, which is the gold ETF. So I started that back in March. I think it was March 16th or 18th. I forget exactly. But then what I did, I drew vertical lines on this chart that are showing you the 50% and the 100% of when the float count terminated. You can see on the first line we got a high. The second line we got a high. Then we got a low. Then we had a low. Then we didn't really have a turning point. We just had a continuation. Then we had a low. We had a very minor low that set off into a 5-day run. Next one day off a low. Next one in the area of a low, 1 day off again. Then we had a high. And then we were just in a sideways period. That one's a miss. And we had a low, one day off a low, got into a 4-day up move. Then one in the middle of a run, nice pivot high, pivot high. Here we get a continuation breakout. Here we're one day off the low. Here we're at a low. Here we're at a high. Here we get another sideways movement. We get a breakout and one day down, and then we have a high. So you can see out of most of these, only about 4 of them weren't clear sound signals out of what, 5, 10, 15, about 21 or 22 on the chart. So you can also take a look at the advanced decline volume ratio and see if that can give you any type of advance warning on what may happen. A lot of times you'll see that the volume will be low and it'll turn up right before you come to a low, before the advance starts, or vice versa. You may hit a high and get a lead indicator on a high. Oftentimes the spike high may come at a low. Like this particular spike high here, you had advancing volume into a decline. The volume peaked right at the low. That's a good indication that when you're trading down on advancing volume, that advancing volume is going to turn the market around. And you can see what happened when you got that big spike. We got a really big move in GLD after that. Okay, so that's GLD. Let's move on to the next chart and see what we got. Okay, and here we got the ES. Let's take a little different look at this. I drew a trend line off the November low. Obviously, the contract is trading very thinly back then. You can see we don't have much volume. I actually put the volume indicator on this chart along with the float and the advanced decline ratio. But I'm not looking at the float indicator on this chart. I want to show you something else. So what we're looking at, this trend line is kind of a good guidepost that when price is running out of steam and volume starts to decline, a bear market or a significant bear move could be imminent. So take a look at the two trend lines I've got here. You can see in at the bottom here on the volume indicator around June 12th, 13th, as the June contract was expiring and traders started to roll over into the September contract, you can see the volume start to build. Now let's take a look at where I have the trend line on the volume spike. You can see we've got declining volume happening here. But on the price action, you can see on the spike high, we actually had the low, and that was the I think the July 19th low right there. Then we traded up for a few days, and now we've been we were flat for about almost 2 weeks, and now we've started creeping up gradually. You can see there's not a lot of impetus in this move. This could be the last push up. And what makes this really interesting is the price action was flat to slightly up. So the price is increasing slightly, but only on declining volume. And when you see this, this is a sign of impending weakness. So I think pretty soon we're going to see, if volume doesn't pick up next week and start to surpass this, say like this 800,000, 1 million per day area, this thing's going to be rolling over soon, and we're going to get what should be a fairly significant correction. Okay, let's move to the last chart. Okay, now here's a look at Apple. This is the weekly chart. Apple has a float of 16.3 billion shares. Now that's the float, not the shares outstanding. The shares outstanding in Apple are in the trillions. I forgot the exact number. You can just Google it and you can get this information on Google. It's very easy to find, and if your platform doesn't have a volume indicator, you can write your own. These are pretty simple indicators to write if you have a little bit of coding experience, or go on their help forums and someone has probably already done this or can help you to do this. So what you can see is I've got the float turnover. Now right here at this point, we just actually hit the 100% of this float on the weekly chart yesterday at Friday's close. You can see we had this Apple was trading at this resistance area for the whole week. It couldn't take out this high. It did finally push past this high at the end of the day yesterday. So now that we're at the end of the float, we're going to get some sort of a trigger here. It's either going to be an upside breakout or it's going to roll over and go into a bear move. But we're right at that point now. So I strongly recommend that if you don't now, that you incorporate volume with this type of indication into your trading. This is very telling and gives you tremendous opportunity for turning points. So what we do, we look at these and then we combine these with our other indications, and it's just another really great tool to have in your arsenal. So thanks for watching, and we'll be back again with another video tomorrow.